Hey everybody, good to be here. My name's Brent Morse. It's Advanced Options Day. That's Friday. We do this each week, and just glad you're here, whether you're watching live or on a recording. This week I want to talk about using the tools available, that is the thinkorswim desktop software platform, to help visualize your trades, to make use of that risk profile graph, to really understand it. We'll start basic. We'll get to more of the advanced features on it as well. We're going to do that next, and we'll look at some sample trades, some example trades as we do so. I'm joined alongside Barb Armstrong in the chat. She's helping me out. I appreciate Barb. I've been working here with her for a long time, and she has taught thousands and thousands of investors just like you. So make sure you check out some of her webcasts, including the Trading a Smaller Account webcast. We'll look at where the schedule is, what the schedule looks like in just a little bit. But let me also mention, Barb and I are both on X, at Brent Morse CS, at Barb Armstrong CS, for additional content throughout the week. Now, before we get to the chief reason you're here, let me just mention options do carry a high level of risk and are not suitable for all investors. And the information today is for general informational purposes only. Should not be considered an individual recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as the sole means of investment research. The paper money software application is provided for educational purposes only. I'm not going to factor in commissions in the trades that we model today for you, but just realize they are a factor you should consider. All investing involves risks, including the potential loss of principal. And short options can be assigned at any time up to expiration, regardless of the in-the-money amount. That's different than in paper money. Paper money doesn't assign short options early, so that's one difference between them. But it is something to be aware of. And there's no guarantee that an execution of a stop order is going to be at or near the stop price. Okay, let's take a look at the markets here before we get too far into this. And, this week hasn't been a great week in the markets. They've pulled back a little bit of a bounce day, just like a little kiss off that 20-day moving average on. Let me zoom in just a little bit on that, on there. That's the 20-day moving average, the red line. So not a surprise. We talked about it earlier in the week in webcasts. When the market gets elevated, gets extended from that 20-day, often we expect it to kind of pull back, and it's doing, I think, what a lot of bullish traders would expect perhaps, and that is it to bounce off that 20-day. Now, that's no guarantee. It can certainly go down from here, but today's a nice bullish day for that. We had some PCE data, that's inflation data that came out this morning, that came out mostly in line, but the markets kind of reacted positively to that. It's kind of funny how things work. Yesterday, we had like 4 separate economic data points that were pretty positive, I felt, and the market went down, okay? So, there's not always this one-to-one correlation. In fact, sometimes good news can be bad news, which is kind of, in terms of how the market takes it, which is kind of what we saw yesterday, I think. But let's move on. Let's talk about things. Before I get too far into this, though, let me mention this. We're doing a little tweaks to some of our webcasts here. Those of you who are regulars will notice this. Starting the week of October 6th, okay? Starting the week of October 6th, we're going to be changing the name of this webcast from Advanced Options Strategies, which is what it's called officially right now, to Condors, Calendars, and Butterflies. And we're basically going to be covering the same stuff in this class. So there's not really going to be much of a change in this webcast other than we're changing the name of it. Okay, so don't get confused when you see this in a couple weeks. We'll remind you again next week on this. We're still cover things like ratio spreads in this class, double calendars, and a lot more, okay, multi-leg strategies. But we're going to be adding a second advanced options type class on Mondays called Straddles and Strangles. I think Connie Hill is going to be teaching that one if I'm not mistaken. And so, those are strategies options traders may consider, when earnings are coming out or when volatile moves are potentially on the horizon. So just a little name change. So just be aware, but some extra content there for you on that. Now, if you're going, Brent, I want to know more about this. you can always check out our schedule. This is a little bit big for this page. Let me just see if I can fit this on this monitor. I went a little small there. The way to see our schedule, go to schwab.com/coaching. You're going to come up with this page. You can go to live webcast right here. Click on that. And now this is this week's. And remember, we said October 6th. So when we go to October, the first week is going to be basically the same as this week. And here's October 6th. So straddles and strangles, yeah, Connie. So you can check that out. This, you know what? It still says advanced charting techniques. It's lying to you. It's actually, the name is going to be not, oh, well, no, that's right. That is right. That is right. Sorry. Condors, calendars, and butterflies. I was thinking advanced options. This is the new name of the class, but you can see other than that, that hasn't changed. All right. So there you go. Okay. Let me move this out of the way. We don't need that anymore. All right, I think that's all I wanted to show you on that. Now what I want to do is I want to talk to you about the Analyze tab. So when we talk about the Risk Profile tab or the Analyze tab, this is the Analyze tab right here, okay? And the thing is with the Analyze tab, sometimes I just kind of, as a shortcut, I say, well, look at it on the Analyze tab. Usually when people talk about this Analyze tab, they're talking about the Risk Profile, which is basically profit loss graphs of your options trades. I think it is very important in helping you to be able to visualize these trades. Now, especially as you get to these complex multi-legged trades, it can be very helpful. It's not always obvious. I'm going to show you an example that came up last week that I kind of ran out of time last week and didn't get to it. But it was kind of a more complex trade, and I wanted to take you here to this risk profile because it makes it easier. Now today, I want to show you it. I want to show you how to use it. I want to talk to you about what it does. But briefly, before we get that, let me just let you know why we care, why you should care about this. Because it helps inform you about the specs on the trade. It helps you visualize the trade, where it needs to go. It tells you about the pros and cons of the trade. It tells you what the max gain possibly is, possibly what the max loss is, what the break-even points are. Sometimes you have multiple break-even points on a trade. What the pros, what the probabilities are of a trade, the cons, what option Greeks are for various scenarios, whether the underlying stock goes up or goes down. There you go. So that's why we're going to do this. It's important to know this. And in the process, what we're going to do is we're going to look at some potential trades. Now, I know you guys are going, this is an advanced options class. Brent, why are you going to start off with just a plain long call? Normally, I don't do that in this class, but I want to simplify this just at the beginning. We'll get to multi-leg options trades in just a little bit, but I just want to simplify this just to kind of show you the basics of how this page works, the risk profile tab works, and then we can get to this. Now, realize if you want to analyze a trade, you can look at existing trades you have. So for example, if I want to go to the Analyze tab and Risk Profile, and I type in KO, which I have what do I have on this? You can see right down here, I've got a long put on KO right here. And you can see it visualized right here. Now, I'll tell you all about how to read this chart in just a minute, but this is a long put right there, okay? And I wanted to simplify this for you just with a single option, just because I think a lot of you are familiar. Some of you may not be as familiar with like an iron condor or something, which we'll look at in just a little bit. So if you already have a trade in your portfolio, you just simply type the symbol in. You're on the Risk Profile tab, type the symbol in, and you may have to look at the bottom of the page, but you'll see the trade down there that you have, and you can see it graphed out. Now, if you don't have that and you just want to go, hey, let's look at Ford. Maybe you're bullish on Ford. Maybe you're going, the trend is up on Ford. We're bouncing off a potential support level. Nice bullish momentum on this. Therefore, I want to see what a long call would look like on this. What you can do is you can just go straight to the Analyze tab, put in forward, go to the Add Simulated Trades, and we can then look at a potential trade. Let's go out to, we'll go out, I don't know, 56 days here. Okay, it doesn't matter. I'm just going to go at the money, or maybe just, yeah, stock's right at 12 bucks. We'll just go at the money on that. Nice tight spreads. What does this trade look like? Well, I know a lot of you know long calls. I'm now going to click on the risk profile graph. When I look at this and I scroll down, you can see down here in color, green, it's a long call. Okay, it's buying a long call. If I made it selling, it would be in kind of the reddish color, right? But here we're buying a long call. Let me just move this out. I just want to make it big enough so that you can see it. Now, there's a few things you need to know on this page. And if you're familiar with this already, bear with me. I'm going to go through fairly quickly, but I want to make sure everybody knows. On the graph, you have a y-axis. That's this vertical axis. This is profits or losses. $200 profit, $100 profit, break even right here at zero, a minus 100. That's a $100 loss there. This represents the underlying price of the stock. Right now, the stock's right around 12 bucks, okay? And so look at the, if you look at the graph, you can see if the stock stays at 12 bucks at expiration, look at the blue line, we can, right there, that's the blue line, 12 bucks, we can look over and we can see we're losing some money there. We're below that break-even point, okay? So profits or loss are displayed right there. Underlying stock prices right there. Sometimes you may need to adjust it a little bit. You can kind of drag the graph a little bit and then move. If you drag right on the axis, it's going to kind of change the axis. If you drag right on the graph, if you click and pull on the graph, it just kind of moves it left or right there, okay? So that's what it looks like. So what can we tell from the long call? Well, the long call, we can see, if the stock goes down, it's not good. We're losing money. No surprise, you know that. If the stock is down and it keeps going down, there's a limit to how much you lose. You lose the initial cost, 65 bucks there. Now you may be going this and going, well, that scale is tough to see. I know it's between 0 and minus 100, but I want to know exactly how much. Just put your cursor on it and you can look right here in this bottom left. Look at the blue line there. It shows minus $65. That's a loss. Now, what if the stock goes up? If the stock goes up, generally that's good for a long call. Let's say it goes up to 15. How much money are we going to be making or losing? About $235. Do you see that? Okay. So that's how you can tell that. So you can tell profits and losses. You can tell, that's what the y-axis and x-axis are for. You can tell the general shape of what this graph looks like. We want the stock to go up. If we were looking at this and it looked like, say, this, okay, what would we want the stock to do? We'd want the stock to go down, because if the stock went down this way, that means we're gaining more profits this way. So if it looked like that, that's what we would see. So when I say visualize, I want you to be able to visualize these trades. Yeah, easy enough, maybe, if you're familiar with long calls and long puts, that's easy enough. But when you start talking about back ratio spreads, which we did last week, by the way, maybe it's not so obvious to you. It's not obvious to me a lot of times. So there. Now, if you're interested in looking back at, say, that back ratio spreads or any other webcast I've done, here's the playlist. I just put it in the chat for those of you watching live for this webcast. If you're watching on a recording, just go to the Trader Talks channel. Go to the Trader Talks channel on YouTube. Click on playlists. You'll see the advanced options playlist, which will soon be relabeled the Condors, Calendars, and Butterflies playlist. I imagine in a couple weeks they'll do that. And there you go. Okay. So there's some more things. Those are the basic features, but there's more features here on this. Number one, you can look at probabilities. What are the odds this is at break even or better? Well, let's take a look and just focus on this blue line for now. I'll talk to you about that purple line in just a minute. How do you tell the odds? The first key thing to know if you're going to look at probabilities here on this is you got to get your dates right. This date in the upper right portion of the page should be your expiration date plus 1 day, okay? Expiration date is November 21st. I'm going to change that to November 21st. This day down here should be today, okay? Today is September 26th, so we're going to just leave that as is. We were going to change this one to November 22nd, 1 day after this day down here, okay? Now, if I go here and I look at the probabilities, these slices right here, this dashed line tells me the probabilities of the stock being above or below this particular level. What are the odds that the stock is above $15 on November, on expiration here, on expiration, about 5.5% there. Not much. Well, that require a pretty big move on forward. Okay, so that's the first thing. You can help yourself out sometimes, and you may want to just automatically set your slices to different things. Click on this little 3-line menu, go to Set Slices. It gives you different choices. You could say down 10%, base just means the current price, or up 10%. Okay, there we go. Okay, current price, down 10%, up 10%. What are the odds it's more than 10% down? 26%. What are the odds it's between where the stock is now and 10% down? About 27%. Between where it is now and up 10%, about 23%, and more than 10%, about 23%. You can see those. You can shift these around if you like. You can shift those. You can just click and drag if you want. But if you look, if you notice, as I drag this, it's changing the slices down here. You can just type in values right here. If I put in, say, $10 even down here, what's going to happen? The slice right here changes to $10 even. Okay? Now, so that's probabilities. What about, there's another probability. Click right here. You can go Set Slices, probabilities of break even at expiration. And that did not, well, let me get rid of the, you can always get rid of these if you want. You can delete the slice, delete the slice. Let's just start from scratch here. Delete slice. Now, if I click delete slice, that one doesn't want to do, oh, I have it locked. Is that why? Why won't that delete? I guess it always wants you to have something in there. But what I'm going to do is I'm going to right click on this. I'm going to set my slices to break even, put this in there, and that should, it's not working right now, put this slice right on a break even point here on this. So I'm not sure why that is not working. I'm going to give it one more chance here. Let me just reset that. Let me set slices to break even. So for some reason that's not working right now, but it should put me at break even. Now, there's 2 lines here. I've asked you to focus on the blue line. That line represents at expiration. But everybody here knows that's listening to me right now, options change over time. What about today? Today's graph looks like this purple line right now. Think about it. With the long call, there's time decay. As time goes on, this option, which looks like this purple line right now, our profit loss looks like this purple line right now, kind of goes down. It gets worse because of that negative theta there. So that's another thing to pay attention to. Where the purple line is right now, or whatever day you select right here, but generally we're going to put right now. And the blue line represents at expiration. Okay. Now, there's one other thing I want to mention to you before I move on, and we'll look at some other trades here. Okay. I want to get to some more advanced trades. The other thing is slices. I mentioned you can put slices wherever you want. You can drag them wherever you want. You can add them here. You can set your slices. Let's see if we can get this. I'm going to try one more time. Let's say we want to go up. What's this little funny sigma symbol? That's just a standard deviation and standard deviation down. Or I can go 7 rows of a 5% step. Oh, look, it puts in 7 rows, current price, that's the base, that's where we're currently at, and then up 5%, down 5%, up 10%, down 10%. There's a whole lot of slices on the chart right now, okay? So you can do that if you want. You can move those slices around. Now, just to simplify things just a little bit, what I'm going to do is let me just reset those. And I want to talk to you about the Greeks. You can see, so we've seen so far, we can see kind of what our potential profits are for your trade. That's important to know. What your potential losses are for the trade, that's important to know. What your probabilities are for the trade, we talked about that. What about the Greeks though? On some trades, you're going to want to know what the Greeks are. For the current price, so we're just going to focus on this middle slice right here. Here's the Greeks for this trade. If I do this, it's a 52 delta, okay? It's a 24 gamma minus 56 delta, and so on, theta, and so on. Okay, now, what if the stock goes up 10%? Is the delta going to be the same? No, delta's not going to be the same. Gamma, theta, vega aren't going to be the same. They change. In fact, they can change from positive to negative depending on the type of trade. On a long call, they're always going to be negative for theta. Delta is always going to be positive to some extent, but delta changes. So you can see how the Greeks adjust as the stock moves. Okay. Now, Harry said, can I show an iron condor or a butterfly? Yes, I can. I'm going to. I just wanted to start off with this basic one to start here. Okay. So there we go. Any questions on this before I move on to we're going to go to some multi-leg examples here. I just wanted to start basic for the basic components of this, but we'll still be looking at this. Now, let me mention something. Last week, and I'm planning on going to Iron Condor here in just a little bit, but last week we did a back ratio spread. Some of you were here last week. And one of the questions that came in, I think it was from Wiley or Chris maybe, or both, is, hey, what if instead of the back ratio spread, I did a long synthetic with the protective put instead? Wouldn't that essentially be the same thing? And the answer is they're very similar, okay? They're very similar. And any different trades you have, there'll be pros and cons to. But this is a kind of an example of why this is a valuable thing, because like, I can't visualize it off my head. Some of you are smarter than me, no doubt. And you can just visualize the difference right here. I can't. And you can maybe think about the Greeks and what the implications on the Greeks are. I can't. So let's look at this, okay? This was last week's, just to clarify, this was last week's trade. We never even entered the trade, but this was our simulated trade last week, okay, that we were considering. This one right here. And then this is the alternative trade that we were asked about. So if I want to compare these two trades, what would I do? Well, you enter the first one, and then you can enter the others. How did I enter the others? I just went to add simulated trades and enter these, okay? So there we go. That's what we got. Now, let's take a look and compare the two, if I want to compare the two. Let me get rid of that little drawing tool here. And I just want to look, first of all, just kind of visually. Let me do this. I'll look the price slices again in just a minute, but I got to get a little more space here on this. So this is what the back ratio spread looks like. Now that you guys are experts at the risk profile graph, you can see exactly what it does. You can see this is a bullish trade because it goes up from left to right. You can see, oh, the loss is limited. It's the difference between our break even and right there. And it looks like, as far as we can see on this graph, it seems like it's an unlimited potential gain the higher the stock goes up, okay? So that's the first thing. We can also see for this, trade, if we look at our price slices, you can see delta, this is just looking at the current price. Let me reset my slices here. There we go. Delta, 86. Gamma, theta, vega. So if I'm comparing this to this, look at the general shape, first of all, maybe one thing to compare. Well, you can see they look pretty similar, right? There's a little difference, but they look pretty similar. And so, hence the question from last week of, hey, these are pretty similar, what's the difference? And so we need to go to the next level. And I would say the next level is look at your Greeks on this, okay? So let's look at it. I can notice on this, I'm checking and unchecking what I want to look at. I can look at both trades together right there, or I can uncheck the ones I want to uncheck. And if I just want to delete a slice, I can just delete it. But if you have one that is already in the paper money account, and you can uncheck it, but you can't just delete it because you already have the account, the trade in there. Okay, but let's look at our Greeks here on this. So this was the back ratio spread, and I'm just going to, for our purposes, I'm going to focus on the middle strike here, the current price. Delta 86, I'm just going to jot that down real quick. Delta 86, theta minus 18, vega positive 38. Okay. Let's go and let's look at our alternative trade that we may consider. And of course, there are always pros and cons on this. Delta on this trade is 65. On the other trade, it was 86. The other trade was significantly more bullish than this proposed trade. Now, we could change strikes and adjust things. I did the 270 strike on, let me just show you here. I did the 300 and 270 strike on both, just to try and keep apples to apples here on this. But so when I say it's more bullish, well, that's great if Oracle goes up. Okay, here's Oracle right now. Our plan was for this support to hold. Well, today put that in question, doesn't it? So Mighty Mouse says, does this look very bearish? Well, it's looking a lot more bearish today than it had in the past couple weeks there. But right now, yeah, that's probably a pretty bearish candle on this. But I wanted to use our example from last week on this just for our purposes here. Okay, let me go and let's go to price slices. So less bullish, but what's the pro? The pro is, although it's less bullish, it also is going to hurt you less. It's going to go against you less if the stock goes down. Okay, so there's that. What about our Greeks? Greeks are minus 19, which is pretty close to what the other one was. Okay, Greeks don't make much of a difference. The Vega, 41, which is pretty close. The other one was 38. Pretty close to the one. So a lot of times in these trades, when we look at different trades in here, and we're trying to debate between these trades of which one should I do, a lot of times it's kind of sixes, so to speak, right? It's like, I don't know, they're pretty similar, but by using this tool, you can help distinguish between which one you want. Now, if you were looking at this today and you were a technician, you may say, as Mighty Mouse says, hey, this may not be the time for a bullish trade. You may want to wait for a bullish bounce here. Just depends on what your outlook is on that, okay? Now, there's other factors on here that you could consider. no doubt. In this case, we have a in this case, we have a long put. We have a long transaction there, but really, I don't know, just, and then the other thing, I'm not going to take the time to do it right now, but just realize as you're looking at these, look at your break evens. Your break evens are going to be where your slices, where the purple line crosses the zero line. That's the current break even. The break even at expiration is going to be where the blue line crosses this. And you can see there's a little red dash there to try and help you out on that as well. Right around $300 is the break even at expiration. So when you're looking at that chart and going, I need this to be above $300 at expiration, or else this is a trade that would not make any sense for you. Okay, let's look at another example. In this example, I want to look at, and let's see how we're doing. We're doing okay on time. I'm going to go to Cisco, just as an example of a more neutral-ish trade. I don't know. You can always think. You can always think through the like earnings. When's earnings coming out? We had them on 8/13. Now, if you want to see where earnings is, you can, and it's off like the graph. You can always go to the Analyze tab. You can go to Earnings, and you can see, earnings November 12th. Okay. And I just want to compare that. November 12th, that's out a little ways. Let's look at Meta. Meta is another one I was thinking, that's looking kind of neutral-ish. Okay. When's earnings on that one? Analyze tab, earnings, October 29th. For a lot of trades, a lot of traders will say, look, I don't want to be on earnings. I don't even want to mess with earnings. Of course, there's another factor, and that could be implied volatilities. Let's say we're looking at an iron condor on these, okay? And I'm looking, and let's pull up implied volatility. You can see this is Meta, okay? Here was our earnings. Earnings are coming out again at the end of the month, end of next month, end of October. So we got a little while, not forever on this. And before earnings, it's probably not surprising that, it wouldn't be surprising to see implied volatilities continue up, okay? Like that. That was last earnings. You see what implied volatilities did. Implied volatilities tend to creep up here, okay? And it wouldn't surprise me if that continued. Now, the earnings before, which is right here, it's kind of cut off a little bit. IVs actually went down, but that's true for most stocks in the market, because what was happening in early April in the markets was everything was just like going down. And when everything is going down, implied volatilities go high. And so the market kind of reversed itself right about there. And when the market started going up, stocks started going up, implied volatility started to decline. So this is a little bit of an anomaly, I would say, on that in terms of what that IV does. In fact, I think what we're going to see probably, let me go to Cisco, and I think we're probably going to see a similar thing. Yeah, you see on that earnings, it was kind of a similar situation. The whole market kind of crashed, IV spiked, the stock started to recover, IVs went down in front of earnings. So this is a good reminder, IVs don't always go up before earnings. In this case, it did. In this case, it's been heading that way. So let's look at an iron condor here, and let's look at a neutral trade. I'm going to start with an iron condor, but let's consider an alternative to that iron condor, a calendar as well. But let's start with the iron condor. I'm assuming this is going to be a neutral trade. I'm assuming, and I'm not going to go out real long. I don't want to try and predict out very far on this. I'm assuming we have some support there. I'm assuming we have some resistance here, okay? That it's going to stay in here, and I'm only going to plan on being this thing for a couple weeks here, okay? Obviously, the farther out you're planning on trading, like if I go, well, I want to trade 6 months, the odds of it staying in such a small window would be pretty slim in the next 6 months. But I'm going real shorter term. And what I'm going to do is I'm just going to use kind of a probability-based measure in terms of strikes and make sure that the strikes don't fall within what's that? 70, 60 half, 60 and a half, 69 and a half, we'll say 70 and 66, okay? But what I'm gonna do is I'm gonna go to the trade tab. I'm gonna go to Cisco. I'm just gonna do a short term. I'm gonna do weekly options. And I'm gonna look at my deltas. Now, delta tells me how much the option is gonna move in relationship to dollar move in the stock price, but it can also give me kind of a probability. And for iron condors, often we'll target about a 20 delta or negative 20 delta on the put side. Iron condors, we're just gonna sell a put spread, we're gonna sell a call spread. I'm gonna go to the 64. I'm just gonna, maybe I'll do. So I could click on the 64 and I could then click on the strikes individually, or I could go up here and change it to iron condor. But first I want to see my delta here is 19, my delta here is 21, so that's a 70 strike. Okay, so what I'm going to do is I'm going to go up here, I'm going to go switch this to iron condor, and we said 64. I'm just going to sell this, and I'm just going to adjust the strikes down here. We said for puts, we said 64, 63. When we said on calls, we were going to do 70 and 71. This should, hopefully, look about right. Okay, so there's an iron condor. And let me just right-click on this. Oh, by the way, here's another way to look at the trade on the Analyze trade, Analyze tab on the risk profile. We said before you can go straight to the Analyze tab and add simulated trades. You can just go there if it's a trade you're already in. Well, on this one, we're not in it yet, but on this page, once you add the trade, you can always click on Analyze Trade, okay? Okay, let's go here, and I want to go to risk profile. Now, question from Kevin. Will the dividend drop the stock price? A dividend can drop the stock price. Let's just look at this because it's a good question. I think it's worthy of time. It's a 41-cent dividend, okay? Everything else being equal, you'd expect the stock to drop about 41 cents, okay? Now, if the stock is going up anyway that day $1, it'd probably go up a little less than it otherwise would, okay? About 41 cents less than it otherwise would. If the stock is going down $1 that day, it'd probably go down a little bit more. All in all, the impact's about 41 cents. So when you see a dividend and you're wondering about the impact of the stock, just look at the size of the dividend and the impact on the stock. So that's a reasonable dividend here. In fact, if we look at Cisco, you can always look and see what the dividend amount is, and you can see the yield here on this here, but a little under 2.5%. So just consider that, okay? So there we go. All right, let's go back to our trade here. Analyze tab. This is what it looks like. Now, let's just kind of see probabilities on this. Maybe, because when you look at this, you may go, once we actually do it, once we actually look at it here, and look at the probabilities, it may not make sense. Remember, when we're looking at a trade, you got to know what your max gain is, your max loss, where your break evens are, and your probabilities. Okay, so let's just do what we said. We said we were going to go to 18th of October up here. It's already there. Okay, 18th of October. In other words, this day plus 1. This is going to be today's date, and I'm going to hopefully set slices to break even, and hopefully that'll work for me. There we go. It worked. I don't know what it was happening before, but it worked this time. 56% chance of this being at break even or better at expiration. Now, at expiration does not mean before expiration. In other words, if the stock goes up to, say, $69.50 right here before expiration, well, today, for example, be losing money on this trade probably. Okay, that's what now these probabilities measures that we look on Thinkorswim desktop software aren't guarantees. They're just estimations, right? But you can see over time, this purple line would go up as we get closer to expiration, that means the time decay is actually positive for us in there. It's a theta, positive theta trade within bounds. Within bounds. From here to here, it's positive theta because the purple line is below the blue line. As time progresses, this purple line would move closer to what that blue line looks like. That's positive theta. If you go out here, then this would be a negative theta. Over time, that theta would get worse. We could see that if we add, let me do this. Let me add a slice. Come on. Let me add a slice here to this. And let me just move this down. Let me just move this down a little ways. Let's look at our theta down here for this 6150 slice. Notice how the theta is negative on that now because the purple line's above the blue line. That's how that is. Okay, but we can see this is a higher probability trade. Maybe it looks good to you, maybe it doesn't. You can see we're risking more. There's a bigger distance between the break even and the loss point, max loss point, than the break even and the max gain point. So we're risking more than we're potentially gaining, but it is a higher probability trade. Okay? Now, let's do one other thing. We could say, well, hey, this looks okay, but what about, say, a calendar spread? I want to compare that. Let me add simulated trades, and I'm going to look at a potential calendar spread on this. Okay? So what I'm going to do here is, let me go out here. I'm going to go to 17th of October. I'm going to sell a call calendar. I'll just go pretty much at the money. Maybe I'll sell a put calendar because we'll just keep this out of the money just a little bit. And I'm going to click on the bid price. I'm going to go down here. Give us a little more time. We'll go to 35 days. And we said we were doing 67. I'm going to click on the ask price. And now what do I have? Let me go back to that risk profile. That's both trades together. If I did both together, there's nothing wrong with doing both together, but that's how it is. If I just want to look at one or the other, uncheck. That's what the Iron Condor looked like. Here's what the calendar looks like. A little different. You can visualize it. On the calendar, you know, we want it to kind of hit the middle. Let's see what our break-even points are on that calendar. Actually, before we do that, let me just refresh myself. What were our break-even points on this? 63.72 and 70.29. Break-even points on this? Let me set slices to break even. A little tighter. This is a lower probability trade, this calendar right here. Okay. Now, potential gain is more. In fact, our max gain is bigger than our max loss on that. Do you want the higher probability trade that has a lower reward to risk, or the lower probability trade that has the higher return on risk? I don't have an answer for you on that. It's going to be completely up to you on that. But for our purposes here, I'm going to go back to that trade tab because I'm running out of time. I'm going to do more than one. Let's just confirm and send and just look at this for a sec. Max loss is $72 on that. Let me just go and I'm going to increase the number of contracts here on this. I'm going to confirm and send. Make sure you read this over. Make sure it all makes sense to you. And we're going to throw this in our Iron Condors bucket right there and send that trade. Okay. So everybody, what did we do today? We talked about this risk profile, this analyze tab. It helps you to visualize the trade. On simple trades may not be as necessary, but it's important to know how to do this because on more complex trades, such as what we were looking for on that Oracle trade example we gave you, I don't know what I would do on that without the risk profile. And as you become more advanced in options, this is going to be a very, very handy tool for you. So I wanted to give you kind of an overview on that. We looked at an example long call on Ford. We looked at our example, two different example trades on Oracle, the long synthetic with a protective put and a back ratio spread. We looked at an iron condor and a calendar on Cisco. So, hey, appreciate you joining me today. Thank you, Barb, for helping me out in the chat. Always appreciate Barb. I'm out of time, but coming up next, we got our market movers session. That's coming up right at the top of the hour. Everybody have a wonderful weekend. We'll see you same time next week. Bye-bye, everybody.